Hello and welcome to your weekly GoNoGo Show here on June 6th, 2024, midday Thursday. My name is Tyler Wood. I am a CMT charter holder. And as always, I'm joined by Alex Cole. How are you doing, my friend?
Busy, but very well, thank you. How are you?
I have no idea what you're talking about. People refer to Maycember as in like all of the kids' graduation from schools, the band concerts, the frivolity of end of spring cycles, and yet there's no cozy feeling, no presents, no tree to stare at.
No time off.
No time off, exactly. Well, welcome to June, and let's dive into the trend conditions across the asset classes as we always start in our top-down approach. Talk to us about what we're looking at on this heat map here, Alex.
Yeah, so this is our asset class map, of course, and we do this every week, and it's looking a bit better every week for the last few. It's looking better this week in the equity space. We're seeing strong blue bars. We got new highs this week in price. Treasury bond prices painting some strong blue bars as well after some uncertainty last week, and then commodities really just chopping and changing again back to weak go bars. And then the dollar in the lower panel now, that's an interesting one. That's reverse course, and we're in no-go trend for the dollar.
Absolutely. We're going to go through each of these so we can see the price action, get some context, but we're using data visualization to our advantage. We're looking at the absolute trends of each of these four major asset classes just to get a sense of the environment that we're trading in. Let's take a look at the S&P 500 at these all-time highs, just in the full GoNoGo chart. If you're new to looking at this kind of layout, what we're trying to do is capture the mosaic, all of the powerful indicators that are available to us, both in identifying trend, as well as momentum, volume, volatility, and the interplay between those. But we want to keep a simplified chart. We know that technical analysis can introduce analysis paralysis if we have too many indicators on our chart to help us build that responsible checklist. If we're looking at too much of a mess on our charts, it's going to make trade decisions very difficult. So what we've done with GoNoGo is built those into an algorithm in the back end, a trend model, a momentum model, and we look at this very clean view on price action to keep us on the right side of trends. So Alex, walk us through where we're at answering those three simple questions for the S&P 500.
Absolutely. So where are we in terms of the trend? We're in a strong go trend. The go colors obviously are the blue and the aqua. Momentum is positive, having found support at zero. And the zero line, Tyler, of course, so important because we know that gives us an objective level that acts as support or resistance, depending on the trend we're in. And you can see how powerful that was in this last move after the oscillator breaks out above the zero line. This is our GoNoGo squeeze. This grid demonstrates reduced volatility. We can see how that led the color change above, and then we've been in a go trend since. After hitting these highs, we see counter trend correction icons, which tell us that in the short term, momentum has waned and we may struggle to go higher. And we see the weakness then from GoNoGo trend as price falls away from those highs. And then we turn our eye to the oscillator in the below panel. We watch to see whether or not this objective level of zero can be used as support. And of course, it was this time. We break out of another squeeze. We see the strength of the go trend return. And now we're getting trend continuation signal on our chart, which tells us that momentum is resurgent in the direction of the underlying go trend as we hit these new highs.
Absolutely. A great refresher, even for those of you who've been using these tools for a while. That interplay between trend and momentum is really the sweet spot for a lot of trend followers to find momentum resurging in the direction of the underlying trend. Obviously, finding those areas of volatility compression, as the great John Bollinger taught us, can really help us in trading the break in the right direction. So Alex, S&P 500 on a daily chart looking like a strong go trend. We also want to take a look at this across multiple time frames to give ourselves a little more context. So let's bump this out to a weekly and see that we actually haven't broken trend since this bull market began in 2023.
Absolutely not. Yeah, we've been in this strong trend. This was a very much more deep correction than we perhaps anticipated. Oscillator fell below zero, but we never got to no-go colors. We had a moment of uncertainty here, and then the go trend resumed. And now we've seen a very typical way for these indicators to play out in that we're in a go trend. We've seen some weakness. We look to the oscillator and we find support. As it rallies back into positive territory, the strength returns and we're seeing strong go bars on the weekly time frame as well.
Absolutely. So for a lot of the institutional clients that we work with, they're looking at longer time frames. This might actually be their execution time frame on a weekly basis, and they're looking at monthly charts for context. They might pass an order down to the trading desk, and they might be looking at daily and intraday charts for best execution. But the whole idea around trend following is that we're sticking with a move for the meat of the move. And we don't want to get shaken out and whipsawed, as Ed Sequoia taught us through those wonderful songs. All right, let's move away from the equity space. Big announcement from the European Central Bank cutting rates, but let's take a look at what the U.S. 10-year Treasury yields have been doing. When we were focused on that heat map earlier, we saw Treasury bond prices. We're back into Go trends. Those move inversely to the moves in rates. So we've seen some cooling on U.S. interest rates. Talk to us about this trend here, Alex.
Yeah, this was interesting because we saw quite a bit of strength as prices rallied, but we know these relief rallies, you like to call them seductive, and they can be just that. And we never got out of amber colors into Go trend. So this was a strong rally off the low here, but ultimately we've set a new lower high. So a new lower high set, a return to no-go colors, the oscillators return to negative territory. So a no-go trend now back in place for Treasury rates.
Absolutely. And the construction of these charts, we have completely different formulas for that momentum model than we have for the trend model, different sets of indicators involved in the back end of each. But it's the interplay, being able to see those clearly on the chart. That interplay is what generates the icons that we're seeing. And so in a no-go trend, when momentum surges negative in the direction of the underlying trend condition, that's giving us the trend continuation icon, that red circle, that momentum has picked up into negative territory, sped up rather, in the direction of that no-go trend. Let's take a look at this on the weekly basis as well, Alex.
Yeah, on the weekly basis, we can see that we've talked about this sort of ad nauseum, that it's not so much elevated rates, but fast rising rates that spook investors. And you can see that we've been predominantly moving sideways now for some time, and this week has been hasn't hurt that at all. We're far away from these prior highs from last October. We're well within that range, and now we've had a sort of a lower weekly close so far this week, of course, and we're at zero on the oscillator. So right within that range on the weekly chart.
Range bound and mean reverting. You got to take off your trader's hat and put on your analyst's hat when you're looking at Treasury rates. We don't want to see these in a runaway breakout trending in either direction. It's the stability that counts, and that cooling and stability in interest rates has been a tailwind for U.S. equities. Let's take a look at that U.S. dollar chart, Alex. Here at GoNoGo, we love using ETF proxies. It gives us a sense of volume as well. In that lower panel, when you're looking at the GoNoGo oscillator line, that'll change between green and dark blue. The dark blue emphasizing the heavy relative volume associated with the price moves in the upper panel. So talk to us about the dollar breaking into a fresh no-go trend here on the daily chart.
Yeah, and this really highlights the importance of using the two together. We obviously are big believers in the weighted the evidence approach, and once you've got a sense of trend identification, you want to pair that with momentum analysis as well as volume and volatility. And a healthy trend should be supported by momentum moving in the same direction and then cooling into neutral territory, but it shouldn't move into the opposite side of the zero line. And that's what we saw here as prices were staying high and they were in this go trend. The oscillator broke below zero and started to find the zero level to be resistance. And of course, when we saw the chop over the last couple of weeks, before rushing back into these go trends, we were watching the oscillator and seeing that it's still in negative territory and staying at or below zero. So no surprise really when we break out of this max squeeze back into negative territory that it's followed by a new no-go trend.
And so if we just if we pause for a second to talk about that go-no-go squeeze, what we're doing as technical analysts with every tool that we use is trying to visualize investor behavior, take all of that data and try to get a picture and a sense of what's happening. And so if we look at the price action on the dollar index, the range of price moves narrows, right? We had been trending higher and we come into this range. We're vacillating between go and no-go and amber colors on the trend model. We're seeing tighter and tighter price range. At the same time, the GoNoGo oscillator rose to neutral level from negative territory and then got stuck there. And what it's visualizing for us is that tug of war, the competition between buyers and sellers. And when that tug of war resolves, it can resolve sharply in one direction or the other. So here we saw coming up to the zero line from below, that held as resistance. So this is kind of a trend continuation situation. We had negative momentum and broke back lower to -2 on the GoNoGo oscillator as that no-go trend takes shape. And so what the great John Bollinger told us about Bollinger Bands, or if you're familiar with Keltner channels, when you see that volatility compression, you're paying attention to the direction of the break as your signal for high velocity moves in that direction. All right, let's move on from the US dollar. Let's take a look at gold.
So gold had a bit of a wobble over the last week or so. We saw quite a bit of uncertainty come in. Of course, if you were with us over the past month or two, we were watching the break above decade-long resistance levels that formed a massive cup and handle. We saw that break higher on monthly charts, and that move has now been consolidated. We've been seeing price stay at these higher levels. But last week or so, we saw a lot of uncertainty come in. Question was then going to be what would happen next. What we've seen so far is a go trend re-emerge with strong bars as the oscillators got back to the zero line. So not really out of the woods in terms of momentum, needs to be in the direction of the trend. We're sort of flirting with negative territory here, but we're back at zero with the go trend back on the daily for the time being.
Absolutely. And let's take a look at the high beta little brother of gold. Let's take a look at silver.
So silver's been a nice performer for us. We've seen the go trend in place. We've seen higher highs and higher lows, and you can see how there wasn't the same change in the trend indicator. We saw a normal falling away from prior highs. We saw some weakness with the aqua bars, but it didn't go to those amber go fish colors. So what we're seeing here now is over this time frame, we're seeing a new higher low probably being set. What we'll watch now, Tyler, is whether or not the oscillator stays at zero. We see a squeeze build. If it breaks back into positive territory, then we'll look for price to see if it can set a new high, given that we know momentum is surging in the direction of the trend, should it move into positive territory.
Absolutely. And away from the precious metals, let's take a look at copper. Funny story, I live in a very safe area, but around the bend and through the woods, a neighbor of mine who is a commercial electrician, perhaps the only crime that takes place in a neighborhood like ours was that about 100 pounds of copper wire was taken from his tool shed last weekend. I found that hilarious, that even the thieves are paying attention to GoNoGo charts and seeing that copper has been on a tear. Talk to us about what we're seeing in this trend with negative momentum, pretty strong divergence and heavy volume coming out of that break.
So it has been on a tear. You can see the go trend, a series of higher highs and higher lows. And this is what we keep trying to preach here, is that you can see how well supported the oscillator was by the zero line until it isn't, right? So this part of the trend, very, very healthy. Now we're in a little bit of a period where we may be concerned over the health of the trend. We saw some uncertainty coming in with amber go fish bars. And as you said, oscillator breaking down into negative territory on heavy volume. So momentum out of step now with the trend, which of course is still a go trend. We've seen that go color come back today, but this will be interesting to see what happens going forward.
Absolutely. Very different look to this than it was just last week, where momentum was holding the zero line, trend conditions holding their weak go trend conditions. Little different look to it this week. All right, moving on from our commodities and our intermarket analysis, let's get back to the equity markets, and let's take a look under the hood of the S&P 500 and take a look at what's been driving this bull market. As you know, if you've been watching this show, the top-down approach is to start with some of those market forces, then dig into the equity space and start looking at the sectors that are leading this market higher. Alex, talk to us a little bit about this relative strength heat map.
Yeah, and just a note, everybody that's watching, remember that these maps, if you're interested in these, reach out to us, info@gonogocharts.com. This is something we work with in our research. But get in touch if you like to look at these relative maps and heat maps in general. But what you can see here is just that we are seeing a newcomer to leadership, and that's, of course, the communications sector. So last week we were looking at technology coming back to join utilities. So we had that sort of split effect of a little bit of a barbell effect of growth and more defensiveness of the utility sector leading the way. But now we're seeing a new growth sector taking part and showing relative outperformance with strong Go bars here. So a little bit of a different picture this week.
Absolutely. Now, the thing to keep in mind when you're looking at ratio charts or when you're considering relative strength, the absolute trend of the underlying assets may be up or down, but it's helpful for us to look at relative strength to position ourselves according to the leadership of the market. So at the sector level, we're seeing information technology, communications, and utilities outpacing a rising S&P 500, which is now at all-time highs. And that rotation that you've probably heard lots of analysts talking about all through 2024 here has been from the cyclical sectors, so energy, financials, industrials, materials. That's what was leading us through the spring months, and we've seen a complete rotation away from cyclical sectors into defensive, and now a reemergence of some of our growth sectors like information technology and communications. So for your analytical approach, you want to look to long ideas in the sectors that are working strongest. If you are trading to the short side, you can find those areas of the market that are significantly underperforming the benchmark index and go digging for short trade ideas. We're gonna focus on the long only picture for right now. And our next step then is to dive into the communications sector and look at the industry groups within the XLC Spider ETF that are leading that sector higher. So it's the next level down, what's leading the leading sectors. And when we look at this relative strength heat map, we can see that there are 3 industry groups leading communications higher, but we'll focus on that third one, which is fixed line telecommunications companies, believe it or not. And so Alex, when we dig into these industry groups, we can do a number of scans through the various platforms that you'll find GoNoGo charts on. We can look for those that meet our GoNoGo criteria, trend conditions, momentum occasions, volatility squeezes, you name it. But let's pull up just a few individual equities from that fixed line telco space, starting with the FYBR ticker, Frontier Telecommunications.
Yeah, this has been an interesting one because you can see how it struggled to break higher. I've got this trend line on here, shows how many times that was touched. But now we are above that, and we are in positive territory on the oscillator, generally speaking, over the last couple of weeks, and now riding the zero line with a max GoNoGo squeeze building. So Go trend in place, hasn't hit new highs yet over the last month, but we'll watch to see if we can break out of that squeeze into positive territory. Then we'll be looking for new highs on FYBR.
Absolutely. Let's take a look at this on a weekly basis as well. So the benefit of multiple time frame analysis is that we can see trends take shape, and the longer the time period is, the more sustainable those trends are. We want to trade in the direction of that primary or longer time frame trend. So on a weekly basis, also in strong Go conditions, already broken out of that max squeeze. So you can see this area where the trend line appears. That was the same look that we had on the daily view as it was slowly drifting lower in a blend of no go and amber trend conditions. So on the weekly time frame, a stronger, longer term trend, and it's already back in positive territory on the momentum side. So something in our favor on Frontier Communications. Let's switch over to the next one. CHT is the ticker symbol. We're going to be talking about a Chinese telecommunications company, Chunghwa Telecom, and similarly on that weekly time frame, there we go. We can see the sustainability of this Go trend on that longer time period, and certainly noting that we are coming back towards those prior highs, not yet broken through, but the strong Go trend conditions certainly working in our favor. Above that, is that a $41 level, Alex? It's a little small. eyeballs.
No, yeah. If we can stay in the Go trend and continue to have the oscillating positive territory, we've got these highs that are really close here at around $40 that we'll see if we can get above. But also, if you look at it on the monthly time frame, now you bring in these all-time highs at around 41.50 on a closing basis for the monthly, and you can see what a strong trend that's been on the monthly. Really big dip here, of course, but now back above the zero line, finding support. And on a monthly chart, of course, depends on your time frame and your risk horizons, but a really long-term picture, finding support at zero and lots of trend continuation icons. So we've got these all-time highs here to deal with, but a little bit of room to run.
And just on the educational side, one of the core concepts that you'll learn if you're going through the CMT program or if you're studying with a professional technician, this idea of the polarity principle is really strong, and that's why we look at multiple time frame charts. So those prior highs from 2023 at around $40 a share, that's the first area of resistance that we'd like to see this price trend break through, right? And so what has been resistance, once broken through, can become support. So you've got a very nice level to trade against in that move towards the all-time highs. That's the next area of resistance. And what we're talking about here is a simple behavioral finance concept. People anchor to those prior highs, and you'll see selling pressure come in. You'll see investors taking profits off the table as it reaches those all-time highs. That's what creates the volatility squeezes. That's what creates that tug of war when we come up against resistance areas. But once broken through, that's a logical level of support to trade against. And it's also when we're at all-time highs, then there are no further sellers left to come into that space in a predictable resistance area. All right, let's do another one. KT is the ticker symbol. Little different look from the last two.
Yeah.
Right? Diversity even within the industry groups that are leading the sector that is leading the benchmark.
Yeah, KT has not performed as well, but maybe a case of playing catch up, and maybe now's the time. So, after a much more significant sort of move lower, you can see the Go trend has taken form, and we're seeing a really long extended squeeze on the lower panel. So a max GoNoGo squeeze, but in a Go trend. So as long as the Go trend colors can hold and we break back into positive territory, this would be a nice one to try to take advantage of a surge higher. And we probably would look for new highs then above this level.
Absolutely. Let's take a look at one more, maybe perhaps much more familiar name to all the investors and traders out there. Let's take a look at Meta, Alex. Also in the communications sector, and breaking out of what has been a doldrum of no-go trend conditions on this daily basis.
Yeah, I love this chart. This was actually something that we talked about today and this morning pre-market. Lots of technical concepts being sort of represented here in this chart. First, you can see the concept of polarity that you were talking about. There was resistance here that quickly became support, and was support for a long time until it was broken. Then we see the gap. We see the price fall to the top of the gap from over here on the left. And use the bottom of that gap as support, which is something that we see a lot. And then we've seen this slow climb in the no-go back towards those levels that were support, and then this time, of course, they became resistance. But during that time, what did we do? We filled the gap, right? So that's another concept that's often discussed in technical analysis. So we've got a lot happening from a very traditional standpoint here, and all of it can be seen because there's nothing really on the chart other than the coloring of the price bars. Now what we look for is, as we come back to test this level that's resistance, what happens with our zero line? And of course, we break out of a max squeeze into positive territory. And then for the right side of this pattern, we're finding support now at zero several times. So when we get that surge of momentum, we see amber bars come in and then a break above resistance. So pre-market here, we were at this bar. We were seeing a new Go trend form. We're seeing surging momentum in the direction of the new trend. And so far today, a little bit of follow through. We look to be higher than yesterday's close. So if we can now maintain this new go trend, we're going to look for an attack on these prior highs.
Absolutely. What a great looking textbook example of the polarity principle, but also having less obscurity on your chart, less indicators can make those price levels really jump off. Thank you for that, Alex. In closing today, let's switch over to our cryptocurrency relative strength heat map. Speaking of more high beta securities that behave a lot like our tech and communications stocks, we can see that Bitcoin and Ethereum are outperforming the S&P 500 index, which is in strong go conditions and at all-time highs. So for both the two largest cap cryptos, we're in strong go trends of outperformance to the US equities market. Not a bad look for the crypto bros.
Absolutely.
Absolutely. So if you have questions about GoNoGo charts, if you like these heat maps and the relative strength work that we do both in our research and with our institutional clients, as Alex mentioned, you can shoot us a note, info@GoNoGoCharts.com. Thank you so much for tuning in to this show. And if you're watching this on YouTube, check out a number of the other educational sessions that we've recorded for you that explain the concepts, the tools, how these are all constructed, and how you can use them in your own work. Looking forward to seeing you every single week here on Thursdays midday. And until next time, take care and trade them well.